Hello everyone, and I hope all of you did your examinations well. In this short video, I will be quickly reviewing the paper and will give out the solutions for MCQs, which I could quickly work out in the limited time that I had. At the first look of it, and as I was going through the paper difficulty level, I would put it average, but the paper was lengthy. As normally I was telling even during our revision classes that after this MCQ thing, right, the institute has started making the paper very lengthy. So paper was definitely lengthy, and a lot of questions what we had discussed during our revisions, as it is, I would say, has been picked up. The important areas that we were focusing upon, those have been picked up, so you would not have had any great difficulty in solving the question, right? First one, again, a standard question on EPS. One thing you would have been confused if you had not done conceptually, there are two sets where you had to calculate or check for dilution. Apart from that, it was perfectly fine. This was a question which is repeated a number of times so far, so no problem on that as well. Theory question and this future refund from the plan, that was something which was new concept that they had tried to introduce. Internal reconstruction we are expecting, and it was very lengthy. I know the number of adjustments were very lengthy, so definitely would have taken a lot of time. This one again from standard question from AS 29, it has come in the past as well. Cash flow, I would say this has been really savior for those of you who are good at cash flow. This question, here we are required to cash flow from operating and financing plus the MCQ thing, that is actually a real good savior. Then the thing, this amalgamation was also straightforward, and consolidation, I think this was a cakewalk. We cannot expect an easier question than this on consolidation, right? Then coming to MCQs, without wasting much of your time, because all of you would want to know how much would you have scored. First one, it was on A7 contract costing. I am not giving a detailed solution. I'll give it subsequently so that you don't waste your time. The first thing is, what will be the profit or loss on the contract? Now, they have not said whether it is in this year or in the next year, current year or overall. But because they have just said profit or loss on the contract, if we calculate, we get the loss on contract of 5 lakhs. Things that you have to keep in mind is depreciation is to be charged for 4 years. This unused material has to be reduced, and future cost has to be included while calculating the profit or loss. Okay, I did some permutation and combination, but this appears to be profit or loss on the overall contract. That is what it appears from the face of it. If any one of you have a different point of view, or if you feel something else, please put it out in the chat box, and I'll be more than happy to respond to that, right? Then here, this question on accounting standard 16, purely conceptual. You cannot capitalize interest on your investments that you have made. So if they have invested in equity share, which is not a qualifying asset, so you cannot add it. Okay, so that is the thing. Then case scenario, I told you, right, here you have 4 questions, and there we have a 7-mark question. That was really great, and this was very simple and smooth question. Directly they have given information, we just need to pick it up and total it up. Maybe I don't think I've done mistakes in totaling, but if at all there is any, you just let me know. Cash flow from financing activity 1,60,600. One thing what you would have missed out is this underwriting commission. Underwriting commission is paid on issue of shares or debentures, right? In this case, there is your issue of shares. So underwriting commission would have been paid on issue of shares. So this is your financing activity. Then cash flow from investing activity, straightforward, purchase of goodwill. Nothing to even think about it. 2 marks in just a minute, less than a minute. Cash flow from operating activities, I got 154,500, and investing activities, I got 54,300. All right. Then here we have 5 lakhs of loan taken payable in 10 half-yearly equal instrument. This we had discussed specifically when we were doing the revision session as well. What is current, what is non-current? Taken in June, starting from December we have to pay. So from this, 50,000 is already paid. We are left with 4,50,000. If you are left with 4,50,000, if you are left with 4,50,000, how much is current? Next 1 year, whatever is payable, that 1 lakh is current, and the balance is long-term borrowings. Okay, short-term and long-term. It has to be under short-term borrowings specifically. Then this was a very good question, a lengthy one. Okay, I'll give out the detailed solution subsequently. Here first there is a government grant, then there is a refund of grant, then there is an impairment, then there is an exchange. Now when it is impaired here, from here onwards you would be able to do it correctly. if at all you did a mistake. So impact of impairment of P&L in the books. So for that, first what we need to do, we need to calculate the carrying amount. Okay, so the impairment loss comes out to 6,25,000 on that date. Then amount of P&L on exchange of machine on 1st of April. Now here the question is not very clear. The question is not very clear as to, if you look at it, the wording, they say by paying cash of 2 lakhs and machine valued 18 lakhs. So if I get a machine of 18 lakhs and I have paid cash of 2 lakhs, my current machine is valued at 16 lakhs for exchange purpose. Okay, and impairment is 28 lakhs was here for 4 years. So one more year of depreciation would have made it 21 lakhs. One more year would have made it 21 lakhs. So if 21 lakhs is the carrying amount and 16 lakhs is the exchange value, it should be 5 lakhs. But I think what they wanted to say is they exchange machine by getting cash. That is some confusion. We need more clarity on that aspect. So if you say we have received 2 lakhs and 18 lakhs, so 18 plus 2 is 20, current valuation is 21 lakhs. So you get a loss of 1 lakh. What will be the carrying amount of machine on 31st March after charging depreciation? 29 lakhs. Depreciation to be charged on the machine for the year ended 31st March 22, 4,87,500. Alright. Then reversal of deferred tax asset. Here the reversal will happen when this was reversed. So 82,000 into 20%, 16,400. Permanent difference, direct question. Again a direct question. How much the donation part is permanent, because this is allowed, this is also allowed, this is also allowed. So permanent is only this. So this is also 2 out of 2, you can get it. Value of DTA as on 31st March works out to 1,23,600 and DTL works out to 3,30,000. I am not doing a detailed calculation to save your time, right? If you want, what I'll do is subsequently, we will be giving out the detailed solution which will help you to compare the working that you have done. But at this point of time, you should not be wasting more time than this. You can quickly check up your marks and start looking at the next paper, preparation for the second paper, which is corporate law. Thanks a lot for joining in, and all the best for the next examination.